So I guess the real question is, were the markets too quick to forget? Are there larger implications of Evergrande that go beyond whether any individual bond payment comes through?
If we just look at the company, I think the markets are probably right. I say probably because we never know for sure. Probably right to assume that the contagion from Evergrande can be maintained and kind of ring-fenced, as it were, within the property sector in China, and is not going to spill over into a broader financial contagion in China's financial markets or anybody else's. In other words, no Lehman moment, no Minsky moment, nothing like that, because basically the Chinese government controls really the banks and all of the principal actors, amongst whom it's got to basically shift around Evergrande's assets and, more importantly, its liabilities. It can do that. So in that sense, I think the markets are probably right to be relaxed about this in terms of contagion. But obviously, there's a much bigger story afoot that goes beyond Evergrande, which is China's real estate sector.
Well, exactly, George. I was going to say, okay, we can limit it to the real estate sector. That sounds kind of encouraging, except when you look at how big that real estate sector is, how much of a driver of growth it's been, of employment, of what percentage of GDP is in China, it's pretty startling.
Yeah, so it was valued in 2019, 2020 at about $52 trillion. That's 4 times GDP today, and twice as big as America's real estate market. The last time anybody had a real estate market that was twice as big as America was Japan in 1989. We could go there too if you want, but that's just a kind of casual kind of warning, really. But I mean, I think the problem is, it's a big market. It's an elephant in the economy. It's 29% of GDP, according to a paper that was written by Ken Rogoff quite recently. If you take into account not just construction, but housing services like managing property, buying, selling, and renting, and all of the industries associated with housing construction. So if something happens to construction activity, which it is, I mean, the volumes of building and sales now are down pretty heavily year over year. And if something were to happen to prices, more to the point, because nothing's really happened to Chinese housing prices except going up for the last 20 years, then I think this is a bear market that could go on for a decade, maybe more.
So, George, I mean, we don't want to see ill happen to any investors. We don't want to see people out of work. We don't want to see people's housing prices go down. But let's be frank, for the rest of the world, a lot of concern is, what does it mean about the Chinese economic growth engine? Can they keep driving growth if so much of it came off the property market and still constrain the property market if, in fact, they conclude they have something of a bubble?
Yeah. When I was at the coalface at UBS before I went to Oxford, we used to say that China's property market was the most important sector in the world, and it still is, actually. So in those days, of course, this was because of the, protracted exuberance on the upside. Now its importance lies in the fact that, it's basically facing huge structural headwinds going into the 2020s and 2030s. And so I think what this is going to do is, if it can be reasonably orderly, we don't know that things won't get out of control at some point, but if it can remain orderly, then I think, we're going to see a marked deceleration in China's economic growth. We would have seen it anyway, I think, but the property, the bringing forward of the property down cycle basically is going to exacerbate this. So we might get a kind of a Chinese recession with Chinese characteristics, but very, very low growth is in prospect, I think, in the next few years.
So, George, you wrote that wonderful book, Red Flags, really focused on President Xi. Is President Xi in a position to take a recession? As I recall, he's up for renewal, isn't he?
That's the 64 trillion yuan question. Obviously, China's eruption in the global economy and its own self-confidence, to the extent it has it, is basically rooted in China's economic heft and the fact that nothing goes wrong. If China's economy is going to face much more challenging headwinds in the next few years, and if things did go wrong, let's say in the housing market, or we went through a kind of a non-COVID slump in economic growth, then yeah, lots of things change in terms of the geopolitical narrative, and Xi Jinping's own position in China may be. I say maybe because this is kind of very, very speculative area in particular, but it may be at risk if there are other senior party leaders or factions that kind of feel that maybe China's going the wrong way under this particular leader. He will be nominated for a third term next November 2022 at the 20th Party Congress. But yeah, just watch this space, I think. I mean, we always want closure very quickly. This may take kind of a few years to kind of pan out, but the economy, I think, will be a very, very important determinant of what happens in China politically.
And finally, George, I mean, we care about U.S.-China relations, those of us who live in the United States, but beyond that, it is the number one and the number two economy in the world, and how they get along or don't get along can affect a lot of the rest of the world. Are we better off, the United States, in dealing with China with a secure and happy President Xi, or one who's feeling pressed?
Good question. I think that, we have to strike a balance, don't we, between, just looking at our own options in liberal-leaning democracies, a balance between, not being cowed into submission about China's inevitable rise, but also not being complacent because it's a serious player. We can't really do anything but guess about what's going on inside China. And the risk of a kind of a more unstable China or a politically volatile China, in case they're feeling very edgy about what's going on in the economy, because the storms are kind of brewing, that makes things a lot tougher for policymakers, I think.